Hi, Tim Bigham for Delta Derivatives, Option Hedges and Edges, powered by RBTrader.com, the best option scanning tools on the market today. Looking at a market that needs a little bit of power here. We're still mired in that trading range, unbelievably so. It's been 70 days since we've had really any move outside of this 3% trading range. Ultimately, it'll be resolved. Which way? I'm thinking more the downside here. Certainly, Goldman came out yesterday, lowered their estimates for 2017 and 2018 earnings. So we're looking at 2018 being almost 18 times, believe it or not, 18 times on a forward basis. So on an absolute basis, stocks are certainly not cheap. However, it's that old trade-off, right? On a relative basis, compared to bond yields, stocks are comparatively fairly valued. So that yin and yang continues to play out. High valuations put at a ceiling, uber cheap money putting a floor here. And speaking of something that's getting a little bit uber cheap, we're looking at a stock, Under Armour, that's gotten crushed here. So positioning by selling some out of the money puts to be a buyer on further weakness here. Stock got hammered before and after earnings, so looking relatively attractive as well. On the other side of the coin, Netflix ran into finally some resistance up around big time 129 major resistance level. This has been a ceiling on the stock over the past couple of years, so traded right up to there yesterday, pulled back, closed a little bit lower today. So the fact that, subscriber growth came out in the earnings report looked good, but we're still looking at a stock that is, fundamentally valued at a ridiculous multiple. More importantly, I think, they have that cash burn rate, they have a debt issuance that came out, and the subscriber growth can't continue at the same pace. Simply that law of large numbers, as they're, almost near 100 million users. So growing at the same rate obviously will be a little more difficult here going forward. So I'm selling out of the money call spreads, the 132, 134 call spreads above that 129 resistance, just positioning for Netflix to kind of level out here going forward. And one more position I'm taking is on Cree Research. Saw huge volume post earnings on this over the past couple of days. In the October options that expire this week, they had to overpay to get these options filled. Bought about 10,000 total in the 22, 20.5, and 23 strikes. So I'm buying the stock, selling these calls, just looking for Cree to hang in there for this week and capture some of that big time option premium. So until next time, but especially in this market environment, keep those stops in place. Here's to good trading. Take care.